This is the part 2 of the Lululemon analysis and why this company is going to be fine in the long run. By the way, if you haven't seen the previous video, part 1, or the quarterly data and the most recent news for Lululemon, check this previous video out right here. Watch that first and then come back to this one. Okay, anyways, $228, $27 billion valuation, same price back in 2020 during COVID times. So if you would have bought it at the low during COVID, $188, you are only up 20% in the past 5 years. So currently they have huge share repurchases. Right now they spent over $400 million to repurchase 1.36 million shares, bringing their cash reserve from 1.9 billion to 1.3 billion. So they spent a lot of money repurchasing shares in the first quarter of 2025. As you could see, from 2021 to 2023, we've had double-digit growth, slowly coming down year over year. You could see the slowdown in the growth, and also you could see from 2020, 2021, you could see the slowdown in their stock price coming down. All right, so some of the good things we like on the annual data is the consistency of some of the numbers they are posting. Earnings per share, it's pretty stable. For 2024, they posted $14.67. So earnings per share on a yearly basis has still been improving. This is the main area we're going to take a look at right here. Let's see if I can make it a little bigger. First off, cash position, they are down to 1.3. It says 1.9 right here for 2024, but they spent 400 million, so they're down to 1.3. No long-term debt. Some of the things that I like: retained earnings. I have Warren Buffett's secret right here. So this is one of the metrics that Warren Buffett likes to look at. Looks like from 2023 to 2024, retained earnings are flat. It's the portion of the company's net income in the business that is retained in the business rather than spending it on share dividends. It's one of the key components you want to look at in the balance sheet. I know there's a lot of numbers here, but we're just going to go over a couple different ones. Here's a couple of them. Return on assets. We have consistent return on assets. I mean, take a look at the 10-year data right here. So from 2015 to 2024, 10-year data, consistent return on assets, consistent return on invested capital, and consistent return on equity. Return on capital employed. This is a number that we take out of operating cash flow. This shows that Lululemon has really good operations. And as you can see, it's been consistent with a historical uptrend on these numbers. These are some of the main data points that Warren Buffett goes over. In the short run, they are having a lot of issues right now, as you can see in the stock price. When you take a look at some of the long-term data, and if it's a strong brand, eventually business does come back. And a lot of this is emotion driven. They still have $1 billion in their share repurchase program. So they are currently buying at these prices right now, which is establishing a floor. We have consistent financial metrics, consistent retained earnings. We have $1.3 billion in cash at the present with zero long-term debt. Outstanding shares are declining, and earnings per share is still growing year over year. Net income, we're still receiving some net income. For 2024, they still made $1.8 billion in net income. We have free cash flow right here. So I have cash flow from operation minus capex. What I did was cash flow from operations minus capital expenditures. On a yearly basis, they're still making $1.5 billion in cash flow. So a lot of that money they're going to be earning throughout the year. A lot of that will probably end up going into share repurchases, expansion of new stores, and expansion into Europe, Middle East, Africa, China. Those are the new markets where this company will start seeing some double-digit growth. On a yearly basis, the company seems like it's still doing fine. So in the long run, I believe this can come back. They just have to fix some things. In the short run, we might see this thing drop a little more. If it drops below 200, the support level, it could be a great entry point. But again, guys, not financial advice. But yeah, these are just my thoughts, not financial advice. This company is going to be fine in the long run. We'll keep an eye on this one. Watch out for more share repurchases from insiders. $228, same price you could buy it at in 2020. This company is starting to look undervalued. And thanks for watching this video. We will see you on the next one.